Thanks for tuning in for more stock market news updates. To stay informed on the latest stock developments, press the like button and subscribe. With that being said, let's jump straight into today's stories. In the ever-shifting landscape of financial markets, the recent release of notes from the Federal Reserve's meeting has sent shockwaves through global stock exchanges. It appears that Federal Reserve Chairman Jerome Powell and his colleagues are grappling with persistent worries about inflation. This has triggered a renewed debate about the potential necessity of additional interest rate hikes to rein in inflationary pressures. The notes from the meeting have provided a rare glimpse into the inner workings of the Federal Reserve's deliberations. Analysts and investors have been dissecting every word, trying to discern the potential impact of these concerns on the broader economy and financial markets. The reaction has been swift and pronounced, with stock markets experiencing significant fluctuations in response to the perceived uncertainty. As inflation continues to make headlines and influence market sentiment, it remains to be seen how the Federal Reserve will navigate these challenges. The delicate balance between stimulating economic growth and controlling inflation is one that policymakers must tread carefully. Investors and market participants will undoubtedly be keeping a close watch on any developments from the Federal Reserve in the coming months. In the world of stock trading, we recently witnessed a remarkable spectacle as Saks Parente Golf, a niche golf putter manufacturer, saw its stock surge an astounding 624% in what has been hailed as the strongest market debut of the year. However, the euphoria was short-lived as the company's stock price took a sharp nosedive, leaving investors bewildered and highlighting the inherent risks of high volatility. The roller coaster ride of Saks Parente Golf's stock price serves as a stark reminder of the speculative nature of certain market segments. The wild swings in valuation underscore the importance of due diligence and a balanced approach to investing, even in the face of seemingly irresistible opportunities. It also serves as a cautionary tale for those who may be tempted to chase after short-term gains without fully understanding the underlying fundamentals of a company. While Saks Parente Golf's debut may have captured headlines, it also serves as a valuable lesson about the importance of sustainable growth and prudent investment strategies. As investors continue to navigate a complex and dynamic market environment, the need for careful analysis and a long-term perspective remains paramount. But that is not the only stock that soared lately. Vietnamese startup VinFast made a grand entrance onto the global stage. The company's decision to go public via a special purpose acquisition company saw its stock price surge to unprecedented levels, momentarily eclipsing traditional automotive giants like General Motors and Ford. However, the rapid ascent was met with a swift reality check as VinFast's stock price experienced a 19% decline. This highlights the challenges and uncertainties that often accompany high-growth, high-risk investments in emerging industries. While the EV market has demonstrated immense potential, companies like VinFast must contend with a competitive landscape, evolving consumer preferences, and the formidable task of turning innovation into sustainable profitability. VinFast's ambitious growth projections, which draw parallels to industry leader Tesla, underscore the optimism that surrounds the electric vehicle sector. The company's founder, Pham Nhat Vuong, envisions a future where VinFast becomes a major player in the global EV market. However, as the company navigates the path to profitability and market dominance, investors must remain vigilant and discerning about the opportunities and challenges that lie ahead. In other EV stock news, Fisker has unveiled its latest creation, the electric Alaska pickup truck. This groundbreaking vehicle has garnered widespread attention for its sustainability features and innovative design, signaling Fisker's intention to carve out a unique niche in the fiercely competitive EV market. The Alaska pickup boasts a range of eco-friendly attributes that align with the growing demand for sustainable transportation solutions. With customizable battery packs offering impressive driving ranges, Fisker has positioned the Alaska as a practical choice for both urban commuters and long-haul adventurers. Furthermore, the vehicle's unique storage solutions add a layer of convenience and utility, making it an attractive option for a wide range of potential buyers. However, Fisker is entering a market segment that has become increasingly crowded with established players and new entrants, all vying for consumer attention and loyalty. The rise of electric pickups has become a battleground where industry giants and innovative startups alike are competing to reshape the automotive landscape. As a result, Fisker faces the challenge of differentiating itself and capturing a meaningful share of this burgeoning market. While the Alaska Pickup's sustainability features and design innovations are noteworthy, Fisker must navigate a landscape of complex consumer preferences, technological advancements, and intense competition. The company's success will hinge not only on its ability to deliver on its promises, but also on its capacity to stand out in a field marked by diverse offerings from industry leaders and emerging disruptors. As Fisker embarks on this ambitious journey, industry observers and investors will closely monitor its progress. The Alaska Pickup's performance in the market will serve as a litmus test for Fisker's ability to navigate the challenges of the rapidly evolving EV industry and establish a foothold in the fiercely contested electric pickup segment. In another surprising turn of events, retail giant Target has experienced its first quarterly sales decline in 4 years. The company's struggles come amid a backdrop of shifting consumer sentiment and changing spending patterns, shedding light on the intricate dynamics of the modern retail landscape. Target's explanation for this slump points to the often unpredictable influence of cultural and societal trends. The company attributed part of its sales decline to a consumer backlash over its handling of its Pride collection, illustrating the potential impacts of culture wars on business performance. This incident serves as a reminder that modern corporations must carefully navigate the intersection of commerce and social issues, as consumers increasingly expect companies to align with their values. However, a deeper issue lies in Target's heavy reliance on discretionary spending categories, which make up a significant portion of its annual sales. With economic pressures mounting and prices for essentials on the rise, consumers may find themselves with limited funds to allocate toward discretionary purchases. This shift in spending priorities poses a challenge for a retailer like Target, which has traditionally thrived on catering to a wide range of consumer preferences, from essential goods to indulgent splurges. As the retail landscape continues to evolve, Target faces the dual challenge of responding to culture-driven shifts in consumer behavior while addressing the broader economic realities that impact spending habits. Strategic adjustments, innovative marketing approaches, and a deep understanding of consumer psychology will be critical for Target to navigate these challenges and regain its momentum in the competitive retail arena. Lastly, Nvidia, which is a trailblazer in the semiconductor industry, is poised to captivate markets once again as it approaches the release of its second quarter earnings. Currently, analysts project that Nvidia will bring in $2.08 per share on $11.06 billion in revenue during the earnings report on August 23rd. The company's focus on artificial intelligence applications has sparked optimism among investors, with projections for data center sales growth surpassing Wall Street expectations. Some analysts even believe that this company can surge up to $800 per share in the next 12 months. Nvidia's presence in the data center sector has been underlined by a surge in demand for AI-driven technologies. As industries across the spectrum adopt AI solutions, the demand for robust data processing capabilities has skyrocketed. Nvidia's ability to provide high-performance computing solutions tailored to AI applications positions it favorably to capitalize on this growing trend. This upward trajectory is particularly significant as Nvidia prepares to report its second quarter earnings. Analysts are closely watching the company's performance and guidance, with expectations running high for the semiconductor giant. The consensus estimate for earnings per share and revenue reflects the market's confidence in Nvidia's ability to harness the potential of AI and translate it into robust financial results. Essentially, recent market events have underscored the intricate interplay between macroeconomic factors, company-specific developments, and investor sentiment. The Fed's ongoing inflation concerns continue to reverberate through financial markets, influencing decisions and strategies across various industries. Also, extreme stock price fluctuations, exemplified by Saks Parente Golf and VinFast, serve as reminders of the speculative nature of certain market segments. Meanwhile, the electric vehicle sector remains a focal point, with companies like Fisker and VinFast navigating both opportunities and challenges in a rapidly evolving landscape. Lastly, Target's sales slump reflects the broader challenges facing retailers in an environment of shifting consumer preferences and economic uncertainties. On the technology front, companies like Nvidia showcase their ability to adapt to changing market dynamics while maintaining growth potential. Go press the like button right now and subscribe so you can stay informed on the latest stock market news updates. With that being said, I wish you happy investing.